How can a company with no storefronts, no products, and no everyday advertising quietly become the most powerful financial institution on Earth? Meet BlackRock, an asset management firm controlling more than $9 trillion, with influence over nearly every major corporation in the world. While politicians come and go, BlackRock remains. This isn't just a story about money, it's a story about control, secrecy, and a man who rewrote the rules of global finance. The global financial crisis and BlackRock's big break. In 2008, the world stood on the edge of financial ruin. Banks collapsed. Homes were foreclosed. Massive firms like Lehman Brothers vanished overnight. People lost their jobs, savings, and homes. Governments scrambled to contain the chaos. They needed someone to make sense of the mess. That someone was BlackRock. The U.S. government quietly handed over massive responsibilities to this little-known firm. BlackRock was hired, without competitive bidding, to assess the value of toxic assets, design rescue strategies, and manage bailouts. This wasn't a side gig. This was trillions of dollars on the line. And here's the twist. BlackRock also owned large stakes in the very companies they were bailing out. That's like asking a referee to coach the team he's officiating. The man behind all of this? Larry Fink, BlackRock's co-founder and CEO. The U.S. Treasury trusted him more than anyone else, even after his early career mistake had cost his previous firm $100 million. In this moment of crisis, Larry Fink didn't just help clean up Wall Street. He became its most powerful man. And most people had no idea it even happened. BlackRock and the 2020 pandemic bailouts. Fast forward to 2020. The world is hit by another disaster, the COVID-19 pandemic. Markets crash, companies freeze hiring, debt piles up, and once again, the U.S. Federal Reserve turns to a familiar name, BlackRock. This time, the Fed wasn't just bailing out banks. It began buying corporate debt, bonds issued by private companies. This move was historic. Never before had the Fed directly supported corporate America like this. And who managed this complex program? BlackRock. Again. But remember, BlackRock owns large stakes in the very companies whose bonds they were buying. That means BlackRock was essentially helping boost the companies they already profited from. Talk about influence. This situation raised eyebrows. Was it a conflict of interest? Maybe. But one thing was clear. No company had the tools, data, and power like BlackRock. They were the best option, and they knew it. BlackRock didn't just survive the pandemic, it thrived. The man behind the curtain. Larry Fink. Larry Fink is not a household name, but in finance, he's a legend. He started as a political science major at UCLA, eventually finding his way to Wall Street at the investment bank First Boston. There, he helped pioneer mortgage-backed securities, bundles of home loans sold as investments. At the time, it was brilliant innovation. But this same financial tool would later contribute to the 2008 meltdown. Still, Larry's early success was undeniable. By 31, he was the youngest managing director in the firm's history. But then, disaster struck. A wrong prediction cost First Boston $100 million. Larry was out. That loss could have ended his career. Instead, it fueled him. In 1988, Larry co-founded what would become BlackRock. He promised himself one thing: never make a decision without understanding the full risk. That mindset shaped BlackRock's entire approach. They didn't just make investments, they built Aladdin, a risk management system that analyzes trillions in assets. More on that later. Larry's obsession with control and detail turned BlackRock into a financial juggernaut. What BlackRock actually does? So, what is BlackRock? Let's keep it simple. BlackRock is like a giant vault where people, companies, and even governments store their money to grow over time. Have a 401k? A pension plan? Chances are BlackRock is managing your money. They invest in stocks, bonds, real estate, and more. But they're not a bank. They don't give out loans or credit cards. Instead, they manage assets, which is just a fancy word for anything valuable like money or property. Here's where things get huge. As of today, BlackRock manages over $9 trillion. That's more than the GDP of Japan and Germany combined. It's more money than most countries even have. Their biggest product is called iShares, a group of ETFs, exchange-traded funds, that make it easy for people to invest in the stock market. These funds are like baskets filled with many different stocks. Apple, Microsoft, Amazon, you name it. That gives them massive power. They can influence how companies operate, how they vote in shareholder meetings, and even push for changes in company policies, especially around topics like climate change and corporate responsibility. But that power often comes with zero public accountability. Aladdin, the brain of BlackRock. One of the most secretive and powerful tools in finance today is Aladdin. No, not the cartoon character. Aladdin is a computer system developed by BlackRock that quietly monitors over $21 trillion in assets and analyzes risks across global financial markets. It is a supercomputer system made up of 5,000 servers, constantly analyzing risks, tracking market shifts, and running millions of simulations every day. It's like a crystal ball for investors, predicting what could go wrong before it happens. It sees everything: stock prices, bond yields, credit risk, even climate threats. Used by banks, insurance companies, pension funds, and even governments, Aladdin is trusted with the financial data of the most powerful institutions in the world. And BlackRock? They built it. They run it. They know it inside and out. This is why the US government turns to BlackRock during crises. In 2008, and again in 2020, they were hired to manage bailouts and toxic assets. No public bidding required. Aladdin gave them an edge no one else had. It's not just about influence, it's about information, and Aladdin gives BlackRock more of it than anyone else. In finance, knowledge isn't just power, it's control, circular ownership, and global reach. BlackRock isn't just big, it's everywhere. With operations in over 30 countries and clients in 100+ nations, they are deeply embedded in the global financial system. In 2020, they became the first foreign company allowed to launch a wholly owned mutual fund in China, a market previously closed to outsiders. They hold stakes in the world's largest companies, from Apple, Amazon, and Microsoft to energy giants and aerospace defense contractors. But it's not just the range of companies, it's the structure. Through circular ownership, BlackRock owns shares in companies that also own shares in BlackRock itself. This creates a financial spiderweb that blurs the line between owner and owned. Top banks like JP Morgan, Deutsche Bank, and Wells Fargo count BlackRock among their largest shareholders. And in some cases, those banks invest right back into BlackRock. This self-sustaining network makes the company deeply entangled in global capitalism. Whether you're ordering online, flying across continents, getting surgery, or investing your retirement savings, odds are that BlackRock is quietly profiting somewhere along the line. It's not just scale, it's systemic influence. They're not just in the game, they're part of the field itself: shadow banking and public scrutiny. BlackRock is often labeled a shadow bank, but what does that actually mean? Unlike traditional banks, BlackRock doesn't take deposits or issue credit cards. Instead, it manages money, moves markets, and advises governments without the same strict regulatory oversight. They operate in the shadows of the formal banking system, but their impact is colossal. In 2008, they were called in to manage toxic assets from AIG, Citigroup, and Bear Stearns. In 2020, during the COVID crisis, the Federal Reserve gave BlackRock the job of purchasing corporate bonds, including some issued by companies BlackRock held stakes in. That's not just influence, that's power without accountability. Critics argue that BlackRock's access to government contracts, while also investing in the same companies they're bailing out, is a glaring conflict of interest. Yet, regulators have been slow to act. Despite managing over 10% of global financial assets, BlackRock remains largely unregulated like a bank. This unique position has drawn increasing attention from watchdogs and lawmakers across the US and Europe. But Larry Fink, the man behind it all, rarely makes headlines. That's not by accident, it's by design. Because staying out of the spotlight allows BlackRock to continue operating with almost no public scrutiny, yet tremendous global impact, environmental influence, and controversies. Recently, BlackRock has taken public stands on environmental issues. On one hand, CEO Larry Fink's letters urge companies to take climate risks seriously. He champions ESG, environmental, social, governance, investing, and insists sustainability is key to long-term profits. BlackRock has launched green funds, supported climate resolutions, and even pressured ExxonMobil to act on emissions. But the contradiction lies in their $260+ billion still invested in fossil fuels. They remain top shareholders in companies tied to oil, coal, and gas. Is this leadership or marketing? Critics call it greenwashing, where talk outpaces action. But from BlackRock's perspective, they're simply aligning with where the profits flow. Climate action isn't a charity, it's a trend. And when you control trillions, even a 1% shift in capital has global consequences. Why you've never heard of BlackRock? With all this influence, why don't more people know about BlackRock? Because they don't want you to. They have no need for public attention. They don't sell credit cards, open checking accounts, or run TV ads. Their clients are central banks, pension funds, and megacorporations. The less public attention, the smoother the influence. While Apple courts consumers, BlackRock courts power, quietly. Their low profile shields them from political blowback and media scrutiny. No marketing means no controversies, at least not in the headlines. But financial awareness is growing. People are beginning to ask, who really owns the economy? And behind that curtain, BlackRock is hard to miss. They've thrived in the shadows, but the spotlight is slowly catching up. The future of BlackRock. So, where is this all going? BlackRock isn't just managing money anymore. It's shaping global strategy. From AI-driven risk platforms to climate-focused ETFs, they're embedding themselves deeper into the financial DNA of the world. Their Aladdin system already monitors over $21 trillion in assets globally, and they're expanding further into emerging markets, infrastructure, and digital finance. In 2023, BlackRock announced a multi-billion-dollar partnership with sovereign wealth funds to build renewable energy projects. They're also aligning with governments to steer entire economies toward sustainability goals. Some see this as visionary. Others call it monopolistic. But one thing is certain. BlackRock is no longer just an asset manager. It's becoming an invisible architect of the global economy. And whether we realize it or not, they may already be shaping your future. BlackRock isn't evil. They aren't superheroes either. They're a product of modern finance, data-driven, risk-managed, and unbelievably powerful. They don't run countries, but they do influence the decisions countries make. They don't run your life, but their money flows through the companies that do. So, what do you think? Should a company like BlackRock be allowed this much influence? Let us know in the comments below. And if you found this video insightful, make sure to like, subscribe, and hit the notification bell so you don't miss our deep dives into the stories shaping our world.